Hey everybody, Chuck Barone back in action Monday, July the 25th, 2024. Good to be back. Apologize to everybody for Friday. It was one of them days, guys. Life happens. Try to remember every once in a while that I'm not retired. I don't do just chill and do YouTube and that's it. I'm still working hard every day. Had a closing on Friday, ran overtime, couldn't get back in time to do the show. Didn't want to try to really do it at a different time. I thought it would just been a big mess. Thought it would just be best if I came back today. Funny enough, of course, subscribers in this YouTube thing are not very sympathetic, I guess, especially to working people. I guess that's not unusual, right? And so I lost a shit ton of subscribers, but it's just fine with me, guys. The people that are here, my man Salty, Attila, Big Smoke. We got Jonathan from Buffalo. Yeah, Jonathan, man, how are you? Group of people that come on my lives, on the live chat every day. The people that watch these videos and are into it. You're the guys I'm doing this show for. The fly-by-nighters, the guys who come to criticize or talk about, how I'm not right all the time. Well, I guess we can live without those guys if we have to. Anyway, before I get rambling, let me take a second and welcome everybody to the show. And as always, thank you guys for your support. It means the world to me. Thank you, everybody, on the live chat today. Nice to see everybody there. And we got a lot, guys. So let's start talking about these markets today without all my usual blah, blah, blah. Anyway, markets just continuing to go crazy. Now, of course, we had Powell talking today at some economic forum, and his message was a lot different than the message we've been hearing from the Fed lately. So that's going to be interesting. We'll talk about that in detail. But let's talk about these markets. So the Dow Jones finally catches up with the NASDAQ and the S&P, breaks the all-time record, up 210 points today, settling at 40,211 points. Brand new record for the Dow Jones Industrials. NASDAQ up 74 points today, 18,472. The S&P up 15 points, 5,631. So the stock market just continuing to rocket higher. I don't know, guys. It's starting to look like the blow-off to me. At the end of every bull run, the very end of it gets like almost parabolic before the big kablooey comes. I mean, I guess the market could get really excited about rate cuts. I guess, hey, that's a reason to celebrate. It'll be good for people who need to borrow money. It'll be good for poor people and the working people for sure. But is that a reason to have these giant rallies in the stock market, really? The Fed's going to cut rates, even if they start cutting in July this month. Let's just say they cut their next FOMC meeting, okay? They cut a quarter point. Is that really going to make corporate earnings go through the roof, man? Is that a quarter point drop going to really inspire everybody to get out there and refi their house or, charge a whole bunch of money or go into debt or, ooh, look, I can get a car loan for 6.5 now instead of, 6 3/4 or 7. Come on, guys. So the market, like I said, whenever I see it like this, I don't really have an explanation. Usually that means there's a correction coming because this is just defying gravity now. Corporate earnings are not rising at the pace the market is. And consumers, I've talked about that a Brazilian times on this show, the condition consumers are in. Fascinating times, man. So the bond market, weird bond market day to day. The 10-year sells off, raising the yield 4 basis points, sitting at 4.23%. But people are buying the short. So they're buying the 2-year just a little bit, down 1 basis point at 4.44%. And you notice that inversion starting to narrow, only 21 basis points now. If I'm remembering right, I think the closest it's gotten was 14 basis points. So it's kind of, would be interesting to see it it's inverted, reverting back to normal. Would be interesting to see how the bond market would react to that. Ultimately, that probably will be the way things go, though. As the Fed ratchets down overnight rates, they'll take shorter-term rates with it. But as the U.S. government continues to borrow friggin' hundreds of billions of dollars, well, that's going to push longer, especially the way depending on how they're financing it, typically will push longer term rates higher. The dollar today rallies up 14 basis points, 104.23 on the index. Wow, it doesn't take long, man. The dollar been whipsawing around between just under 104 and around 106. Must be a great time to be a Forex trader, man. If I had my charting on, I probably could tell you guys where to buy and sell this dollar because it's just been up and down like that, but still relatively strong. This is what the government wants. They want a weaker dollar. So we'll see if they get their way. Precious metals today, a mixed day on precious metals with gold rallying $10.60 per ounce at $2,422, 10 cents per ounce for gold. Silver falls 5 cents per ounce, sitting at $30.70 for an ounce of silver. That's kind of a weird thing. I don't like it when doesn't, you got gold up like that, but silver down. That's kind of a weird thing. But maybe there's some profit in silver people are taking. I really believe silver is going to be the metal to be in down the road when everybody starts piling into metals. And according to Citibank, the inflows now are much, much bigger than the outflows. Finally, it's kind of turning around. You're going to see silver rally. Believe that, guys. Oil today falls 26 cents per barrel, $81.95 for a barrel of West Texas Intermediate. So now it looks like it's developing kind of a new trough between 80 and, say, 83. We'll keep an eye on that and see if that's going to be something that's going to stand up. If that 80 really is strong support now, I would like to see oil go test that again. If it bounces higher off that 80 and stays there, we'll know we got to readjust our numbers. Bitcoin today rallies up plus $3,473, 63,390. Bitcoin really rallying on the Trump thing. I guess the markets believe that Trump would be better for cryptos than Biden. So after everything that went down this weekend, I'm sure you guys all saw the fucking madness, excuse my French. So Trump's good for crypto rallies. All right, so this week we're going to get some data. Interesting stuff coming. Today we got Empire Manufacturing, which I really didn't want to get into very much because it's simply the state of manufacturing in the state of New York, which that doesn't really matter to us. Tomorrow we'll get business inventories. That'll be interesting. And business inventories are expected to be higher. Retail sales tomorrow, that's the one I'll be looking for. Although inventories are important because as inventories pile up, number one, creating that inventory creates economic activity in the manufacturing sector, so that's good for business. But piling those inventories up either means they're good, they have sales, or they're expecting sales to meet those inventories, or sooner or later those inventories go on sale and prices start to come down. So that'll be interesting. Retail sales will tell us how consumers are doing. Usually with retail sales, we're going to get some income information too. We'll be looking for that and have a report on that for you guys tomorrow. On Wednesday, we'll get some real estate stuff. We'll get building permits, which are expected to be down. Housing starts, which are expected to be higher, go figure. We'll get industrial production numbers, which are expected to be higher, and capacity utilization, which is expected to be lower. Again, stuff doesn't seem to match, but Wednesday will be an interesting day. Thursday, we will get jobless claims, expected to come in at 228,000 this week. That's up higher from last week's. I think it was around 220 we got. We'll get the Philly Fed survey on Thursday, which is also an important piece of data. Numbers on Philly Fed expected to be higher. We'll get leading indicators, which has just been in a downturn for a long time now, which is expected to be down again. And then Friday, we'll just finish the week with earnings and not a lot of data. That'll be the crazy day on Friday when all this data comes in, because we're going to have, I noticed on an article I was reading earlier today that a lot of Fed people are going to be out talking this week, like an extraordinary amount. Literally every day they're going to have yo-yos out there doing their thing, confusing mostly. But I think the message has changed because of Powell today. Powell was at the economic forum, whatever, and he basically, without saying it outright, certainly sent signals that rate cuts are coming soon. Powell said that they will not wait until inflation actually hits its target. So they're going to basically telling the markets they're going to start cutting rates soon. They're not waiting for inflation to get to 2% to start cutting rates. Got a few quotes here. He said, the implication, this is a quote, the implication is that if you wait until inflation gets all the way down to 2%, you're probably waited too long, unquote. So basically what he's saying is if you actually wait for inflation to get to target, that means circumstances are so tight that they're going to go under 2%, let me finish the quote, having effects which will probably drive inflation below 2%. Why would that be a bad thing? But anyway, obviously, Powell, the message there is pretty strong. They're going to be cutting rates, and they're going to be cutting rates soon. The inflation target is not what it's all about anymore. Now it's about these markets and getting rate cuts done. He said they're still looking for greater confidence, quote unquote. And here's another quote. This was interesting. What increases that confidence is more good inflation data. And lately we've been getting a lot of that. So basically implying that the data is signaling to the Fed governors that they're all clear now to start cutting rates. He also said that a hard landing was, quote unquote, not a likely scenario. So Powell, going against what I really think is happening, is he believes there will be no recession. That's pretty optimistic, I think. He said, he started it with, this was interesting. He started it saying he did not intend to send signals about when the Fed would start cutting rates. Well, I got to tell you guys know my story, what I've been saying and what my opinions are about when he's going to cut rates. I really don't believe they want to cut rates during the election. That pretty much is the way, traditionally, the protocol is that the Fed's not going to get involved in any way in an election. The truth is, though, if they cut rates, Trump will scream bloody murder. If they don't cut rates, it'll be the other team, Biden and his people, screaming bloody murder. They can't win this one. But the message has changed now, guys, okay? But the idea now is, you're not hearing all that double talk bullshit, which they specialize in. The message is pretty implicit now that, they don't care about the target. 2% is, they want to hit 2%, but I guess they're going to say, well, we're at 3 and it's on a downward trajectory. We're going to get to 2 so we can start cutting rates. The only problem is, guys, they did this same movie back in the day in the late 70s and the 80s. And we saw what happened. The last time they cut rates before target, before actually crushing the economy into oblivion, creating 10% unemployment, every time they cut rates prematurely, inflation just went jacking right back up. And they tried it like more than once, okay? So they kept making the same mistake. Okay, good, inflation's going our way. Let's cut rates again. Let's get the economy going. As soon as they cut rates, boop, 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 inflation ratchets right back up. Oh, crap, we cut too soon. Now we got to raise rates, so now they got this. Guys, I seriously hope it doesn't work out that way. But I guess the story, if you fail to learn the lessons of history, that you're doomed to repeat them. And apparently that's where we're going with this stuff, guys. So it's going to be a fascinating finish to this year. I know it's only July, but this election is just going to be the most bananas, crazy, freaking election that I probably have ever seen in my lifetime. And I was alive back in '68, but I was just a kid. So I really wasn't into the politics of it, because I'm thinking in my mind, that's probably the last time we were as divided as we are right now. People want to go back. Well, we haven't been as divided since the Civil War. Bullshit, guys. Okay, the '60s were some crazy times, and so '68 was a tumultuous year, and it led to a giant Republican landslide, which I think could very well be where we're the path around here again. I think if Trump really plays his cards right, going to be tough to come back now, Joe. And I don't believe the Democrats are going to blow Biden out. So we got the election coming up. We got what will the Fed do during the election? Will the economy moving toward a recession? Will Trump inherit a recession, or will he get one basically right after he takes office? Will the Democrats try to cut Biden? We got so much cool stuff going on. Now, add on to it the rest of this stuff for today. Let me listen to this stuff. Evictions are on the rise, guys. People can't pay these rents, outrageous numbers. Landlords not willing to work with them. Evictions are on the rise, especially in the places that were super hot. Vegas, yay, Vegas, being among them. Austin, Texas, Florida, all the hot places in the Sunbelt where everybody was moving to during the pandemic. Big influxes of people. Renters can't pay their rent. Evictions on the rise in big numbers, guys. Big numbers. So that is something we're going to keep an eye on. People can't pay their rent. They can't buy a house there. But the economy is going to boom. All we need is a quarter-point rate cut, man. That makes sense to somebody somewhere, but not to me. BlackRock today announcing they in the second quarter they had inflows of $51 billion, now holding $10.6 trillion freaking dollars in assets. Biggest ever, gigantic monster company, even bigger than Blackstone now, which is saying something, guys. $10.6 trillion this one company controls. They're dominating everything. And when you have that kind of firepower, man, you really have big leverage to do whatever you want. So these concentrations of wealth, I don't know how that's going to end up well. If past is prelude, it's not going to. Citibank came out with a big analysis today talking about inflows, outflows of gold, central banks, boppity beep, predicting gold 3,000. Gold's going to hit 3,000. They're saying probably by the end of the year. That might be a little bit optimistic, but gold, silver, as gold rises, silver's going to tag along. It's just the poor cousin, right? Big doings coming up in metals. Because now when you get these mainstream analysts being super bullish about it, that brings in the people who really don't pay much attention to metals, the brokers that work for these companies that don't really pay attention much to metals. Now they're going to start getting sheets saying we need to put some gold and silver in people's portfolios, giving them instructions on which the angle's best way to do it. Lehman days, guys. So gold and silver, happy days coming. Real estate prices starting to fall now through the Sunbelt. More people more supply getting onto the market. People finally deciding they're going to sell, give up that 3% mortgage. The only problem is, now that they're ready to sell, buyers aren't ready to buy. The corporate cash buyers, they're still in the market, but they're slowing down, and their targets in the market are the bottom. They want to buy all the starter houses. Regular buyers, first-time buyers, people looking to upgrade are non-existent. So prices now, they said 1/3 of houses listed in the Sunbelt. Now that's pretty general area, the Sunbelt, right? But that's basically the South, Texas, Florida, the Gulf states, Vegas, Southern Cal, Arizona. All now supply is up, demand is not there. With that supply, prices starting to come down, which will be good news for buyers. I mean, we need, as I've been saying since this whole thing started, real estate doesn't work if you have high prices and high interest rates. One or the other has to come down. Well, now it looks like we're going to get both coming down as Powell signaling rate cuts and real estate starting to teeter with, no one can afford to buy houses, even if prices come down a little bit. Crazy stuff. And finally, I'm sure a lot of you guys have your Amazon Prime account. Most people do. Well, Amazon Prime Day coming. Most of you guys know that too. Everybody's getting bombarded with 1 friggin' million emails. They're expecting Amazon to sell $14 billion. $14 billion in one day during Amazon Prime Day. So, in spite of my gloom and doom, in spite of all the reports about the state of people's credit and debt, incomes, what do they have in savings, they still have enough money to spend $14 freaking billion in one day on Amazon during Prime Sales Day, guys. Anyway, it's going to be crazy week. Sadly, I'm probably not going to be here for a few days this week. I got a road trip coming up to Casper, Wyoming, going up to Wyoming. And I'm not a flyer, so I'll be driving. So it'll be taking me an extra little bit of time to get up there. So I might be missing a couple of days this week. I'll let you guys know my schedule tomorrow. In the meantime, guys, everybody have a great night. Thank you to all of the guys, all the people, guys and gals, on the chat today. Nice to see you there, Elevate. We got Paradiddle and Sullivan. Hey, how you doing, bud? We got the usual crew on there. Nice to see everybody. Back tomorrow. Bring you the news you need. Going to be an interesting day. Every day is now till the end of this year. In the meantime, have a good day, everybody. Take care.